Hold on.
Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial Insurance Services, and we are here with you today to bring you our weekly wrap-up. Graham, we've kind of had a struggle for the last couple of weeks in the market. What can you tell us about that?
Well, Stacy, I think you hit the nail on the head, right? It's been a struggle. I think it's been a struggle for the market to grab ground and build off of it. We saw 90% down volume in the market last week, so we really saw a flush in the market. All the indices were down, all the sectors were down, really for the most part at varying degrees. Where we saw the S&P, the NASDAQ down about 4 or 5%. We saw the Russell, the small caps down about 6+%. If we're thinking about sectors of the market, we saw oil off 10% with fears of a recession or a deeper recession than maybe first thought. Consumer discretionary, materials, financials, all down, again, 6+% for last week. Really one area of the market that I think the traders are taking their cues off of is the 2-year yield. We really saw an absolutely huge bounce in the 2-year Treasury, 10, 5, 30, you pick it, it went up. We saw the 2-year up to about 4.2% last year. That's the highest in 15+ years. The 10-year up substantially, 3.5 towards 3.7%. And that puts pressure on borrowing cost, right? Because that's what the Fed's trying to do. The Federal Reserve is raising rates, which is what they did last week, the third increase of 3/4 of a basis point. Those are huge hikes. And they said, listen, they're going to do whatever it takes to get inflation down. And they said it's going to cause pain in the market. And they specifically use the word pain. So we have to expect volatility. We have to expect this market trying to grapple with that right now. International markets they're raising their interest rates because they're having huge effects from inflation over there, especially energy costs. Also, there's a really big currency issue going on right now. We have a really strong dollar, so international markets are trying to prop up and support their currencies so the dollar's not so strong against their currencies, and they're trying to put things in place to do that. So we really just saw a lot of volatility, a lot of things coming into one spot last week, causing a lot of volatility.
I understand. Well, is there anything that investors can do short-term versus long-term?
Well, I think we have to put in perspective, right? There is a short term and a long term. We all have it. Long term, we're investing for the long term. Even if you're retired, you're investing for the long term, but you might have some short term needs, right? So as we said all along, for our pre and post retirees, please tighten up the purse strings a little bit. Set aside extra cash. We're suggesting at least 1 year of your fixed expenses out of investments in cash, cash equivalents. Be ultra safe with that money so you can ride out the ebb and flow that this market is going to give us. Now, on the other note, listen, for our younger clients, or you're not going to need this money for the next 5, 10+ years, maybe even 3 years. Listen, you've got to be looking at buying high quality investments, not just what has worked, utilities or staples or things like that. We got to think about buying high quality technology, high quality other sectors in the market, because listen, there's a lot of things on sale, and you know what? They could get cheaper, so keep some dry powder, if you might, on the sidelines to keep on buying if this market goes, a bit lower. But I think for our long-term investors, you got to be thinking long-term. For our ultra short-term traders, or if you need money today, I think you just got to acknowledge that you got to keep some extra cash reserves on the sidelines. Just to understand, it's rocky right now.
I understand. Okay, along that same vein, what do you predict for the market short-term versus long-term? Any ideas?
Yeah, I think short-term, we are signaling an dramatically oversold market. So we could easily get a bounce in the short run. Now, will that have legs to go higher from there? Well, we'll just have to see, because what we're going to need to see is the 2-year yield stop running up, right? We're going to have to see that the Fed is going to have to acknowledge that maybe inflation is coming down. And we are seeing numbers, stubbornly high numbers, but we're seeing numbers rolling over, and the Fed needs to acknowledge that. and realize that maybe they need to take a wait and see approach instead of just a methodical increase approach. I think if we get any resolution in the war, anything like that, this market is set up for a massive rally. But again, to have legs for the intermediate term, not the long term, we need some of those three factors that I mentioned earlier to come into play. Now, one last thing, Stacy, if you're a long-term investor, listen, this too shall pass. We'll get through it. If you got a solid plan and strategy, which I know we put in place with our clients, listen, we're going to ride right through it. I'm not going to say that's not going to be a little stressful or a little painful. Of course it will, but we're going to get through this and we'll move on to better times. But right now, we're in the middle of the fight. Short term, I think we get a bounce. Intermediate term, we'll see if it stabilizes and goes higher. That's a big question mark. Long term, no doubt in my mind, we're going much higher.
All right. Well, thank you so much for that information. And thank you to our viewers for joining us today. I do want to make a note that normally we have our monthly Lunch and Learn webinar on the last Wednesday of each month, which is obviously this coming Wednesday. But we have fall break this week also. And so with that in mind, we've pushed that to next week. So our monthly Lunch and Learn will be next Wednesday. And so we hope to see you then. Hope to see you again on Monday for our next weekly wrap up. And then moving ahead a couple of weeks, we do have our Retirement Planning Today class scheduled in October, about 2 weeks from tomorrow. So if you or someone that you know is at or near retirement age and would benefit from learning the A to Z of the retirement planning process, please have them connect with us, and we would love to see them in class. Thanks again so much for joining us. We hope you have a great week, and we'll see you next week. Take care.
Take care.